The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 16th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here, but more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Well, pick it up, but you can't call me. Just unless I give you my cell phone number, which many of you have. But you can send me an email. That one you can do. Send that off and send it off early. Send it to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a mixed bag. Yeah, the Dow that's down 2 points, basically flat. The S&P is up 13 points. The NASDAQ is up 67. The Russell's up 2. Transports are up 106. Semis up 102. NASDAQ's up 22 points. So it looks like the rally is getting underway. That's to be expected and anticipated. Mr. Bill inside the Tigers Den said, can we talk about the VIX? You know, I don't have my black background charts up on my screen right now to be able to show you, but you can at least trust me. Well, maybe you can trust me. I think you can trust me. When we have a spot VIX index that closes below or has a one-day rate of change below minus 10%, so minus 10% or lower. How do you say that? Below minus 10%? I'd like to think. What that does is that generates an initiation signal, initiation to higher price out there. So that's what took place yesterday. The second thing that took place yesterday was the spot VIX index closed below its 50-day exponential moving average. It's trading even lower this morning out there. So that provides buyers with an edge out there. We should see the S&P 500 continue to move higher. So that's just kind of integrated. That's just kind of the overview, if you will, of the markets. As we take a look at this Stevie screen out here, we can see that copper, so let's pull up the copper charts. It's got a TD9 count topping signal that has to be considered or should be considered if you were a long copper out there. You'll see here, we're going to see this on the daily time frame, by the way, that's being shown. Those are the D stands for daily, the TD9 count signals out there. Today is going, yesterday was bar number 8. That was the high of the pattern. 90% of the time when bar number 8 is high of the pattern, the TD9 count pattern will in fact confirm. It's going to confirm today. It will complete tomorrow. What price should then do in high-grade copper is pull back to support. In lieu of any new profiles it forms, support would be its oscillator and change line, which is currently at $4.26. I'm not saying that's the number that the test will occur at, but it will move back towards that level, or should. Now, you can see that the line, the oscillator and change line, that is, changed from red to green. That tells us the price oscillator moved from below the zero threshold level to above the zero threshold level. That's a bullish signal. But more importantly, when that line forms as a top is making out there, it's really critical. The next buy point, if somebody wanted to take a look at going long lights recruit, would be a test and rejection of that oscillator and change line. Again, right now it's printed out at 426. When I say rejection, I mean it hits it, it tags it, and it closes back above that level. The weekly time frame frame chart for high-grade copper, which last week closed above the top of its profile. It's had obviously follow through this week. That's a bullish message out there. It found support at its breakout level at $4.08 out there. On a monthly time frame, we're looking at the March contract. It's beginning to trade above its green oscillator and change line. Again, a green oscillator and change line tells us we have a rising price oscillator above zero when price is trading above it. That's what we have out there. On a 30-minute time frame chart, I just see a sideways movement for the last many hours out there. Nothing so you got that TD9 count top. It'll go ahead and complete tomorrow. You should start to begin to see a retracement inside of high-grade copper. Is it a guarantee? Absolutely not. Not absolutely. Absolutely not. So whatever the high is of this pattern, could be today's high, could be tomorrow's high. If price starts beginning to trade above it, more importantly, close above it, tells you about a strong accelerated move to the upside. So that's what's going on. We take a look at Dr. Copper. The GDX is also going to go ahead and complete a TD9 count top today. Yesterday was bar number 9. You can see that. You got 9 and a star next to it on my system. We also have the potential for an A to B equals CD pattern to go ahead and confirm today. The B point on this pattern would be the trading session of January 10th. The volume there was about 20 million shares, 19.8. Now, look, we've only been trading for less than 2 hours out here. The volume so far is about 4.2 million shares. So let's say it's a 5 million shares we get there. It's going to be lighter. It should be light in lighter than that swing point as far as confirming an A to B equals CD pattern to the upside. Doesn't mean it won't form one. The reason why I say it doesn't mean it won't form one is simply because of gold. And we're going to put up the gold chart up on our screens right here. Again, we're just looking at daily, weekly, monthly, but these populate relatively quickly. And we're looking at the trading session from 4 days ago. That was the trading session that formed that TD9 count topping pattern. You'll see that momentarily. It was bar number 8 that made that high. If at day's end price closed above 27.35, let me just open up the chart here. What gold should then do, that tells us about a strong upward momentum move, although it is back against areas where it has found resistance before. But this is suggesting that we should then see a move up towards the 28.26 level, and that is this TD9 count break down area. Of course, you'd still want to see price close above this resistance. You had a bearish engulfing candle back on November 25th. That resistance set up 27.48. We're trading above that. That is bullish. If we take a look at, Bob Uecker passed away. I just referred to him on Sunday playing golf. Oh, that's too bad. That's too bad. In any event, with regard to gold out there, thanks for letting us know there, Dan. For gold, it's December the 12th out there. That high, 27.6130. So if we can close above that, then I'd say that says we head to 28.26. But the point that I wanted to make is if gold negates its TD9 count, even though the GDX is forming a TD9 count pattern, there's such a tight directional correlation. It would suggest that maybe the GDX is going to negate its TD9 count top as well. That is as long as gold does out there. So I think on this set of charts out here, that's about it for those that we see that have changing signals. It doesn't show up the XAU up here, bar number 9, but it doesn't show it as being the high of the pattern out there, and that is the case as we speak right now. Right now in the XAU, which would be better than the GDX, I would say, will complete a TD9 count. But what you'd like to see it do today, quite frankly, I'm glad that I even pulled this up. Maybe you are too. 149.18 is the number. You'd like to see price close below 149.18. Why is that? Because then, even though it's a TD9 count, it's not a TD9 count top. And then it would add the idea that gold's going to rally, as well as the mining equities. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's take a look at the daily equity future contracts out here. And 3 of the 4, the story of the day is really all about resistance. Resistance of those profile levels. So when we take a look at the ES Mini, it has a bear structured profile. It has a sell zone that exists between the level of 59.64 and 59.91. If price is able to close above 59.91, it's a signal that we should continue to head higher. In the case of the NQ, it's also a sell zone. That sell zone exists between 21.415 and 21.535. We can see in both cases they have held as resistance out there. We put that together with the initiation signal that the spot VIX gave us, and that we're trading lower. Price should be able to take these levels out. But these are still the areas where sellers exist, period. So the battle is on. And the battle is on also inside the Russell 2000. The Russell 2000, which had that nice Rhodes momentum indicator bottom, forming that bullish hammer candle 4 days ago, rallied right up into resistance where the sellers were located, and that's at 22.85. If their price is able to close above that, we're off to the races. Now, the Dow, to a certain extent, has been the weaker of the indices out here, and yet it closed above the top of its profile yesterday. Slightly bearish in structure, remains well above it as we speak right now. That signal that wants to move higher, it has a profile change in trend. It never generated the bullish reversal candle, at least on the equity future contract. That is not the case, I believe, on the cash indice, which did form that by the D-point bottom pattern out there. Today looks like if we do trade to the upside, in the case of the ES Mini, that would be 4 days to the upside out there, would suggest that we would see some type of pullback or retracement over the coming days. I would be bar number 4 also for the Dow as well as for the Russell 2000 with regard to higher closes. The NQ would only be bar number 2 out there. So if it can take out 535.93, that would be bullish, and likely we see more than just a 2-day rally there. So that's what's going on. We take a look at the daily time frame. Let's just take a quick peek and see what's going on intraday here. And intraday, let's take a look at the NQ. Knowing that it had made that move up to the resistance level, and now we're seeing what it's doing to the downside. And to the downside, we've got to really take a look at first, I would say, the 10 and 15 minute time frame charts, where price pulled back and tested so far and rejected its breakout level. So the key areas for the day, we'll call the lower of the two patterns out there, is going to be 21,353. Now there's a TD9 count bottom that also formed on a 15-minute basis. That low was 21,354.50. So if we close below 21,353, good signal there that we move to the downside. If we look at a 30-minute time frame chart, it's trading below profile support. That says be careful to the downside. 60 minutes says I need a close below my bullish structured zone, the buy zone, if you will, 21,167 to 21,311 out there. That's its buy zone. Watch the 21,374 level. Just trading with inside profile on our upper range set of charts out there, although the 5-hour trading above profile resistance. The 4-hour chart does have a sell the D point atop. So I would say if 21,353 fails, we should then see the NQ pull back to the 21,249 level. So that's just an overview of the markets at this stage here. We have some requests that are in. Let's get to those. We can always come back and take a look at intraday charts on the ES and so forth. The first question coming in from Tom G. Good morning to you, Tom. Thanks for writing in. Tom took a long position inside of ticker symbol NAT, and it turns out right now at this stage here, not a good move. Now, Tom, this formed a TD9 count top yesterday. It was bar number 8 that identified the high. It's going to complete that pattern today. The high out there that I'm referring to was from January 14th. So that was a caution signal to take a long position. That high out there is 302. If price closed above 302, beautiful thing, then you'd be running to the upside. And your question was, will you get to 320? In order to get to 320, I think it was an option trade that you had taken. You've got to close above that TD9 count top. Now, we've got that TD9 count top that typically says price will pull back and test support. Yesterday, a new profile formed as well. The top was at 302. The center is at 291, and the bottom is at about 280. We're 282 right now. If 280 does not hold, then you're going to likely see a move back to the 268-ish area. 268-ish being that red oscillator and change on it. Price closed below that, you would see Nordic American tankers down at 247. You have to like the weekly TD9 count bottom out there. You got to like the monthly TD9 count bottom. So longer term, this looks like a very good buy. So maybe, and I don't recall if this was just a very short-term trade for you. I think they typically are. But if you're looking for something a little bit longer term out here, what we'd all be pulling for is for the daily time frame to pull back and testing a key level of support. It may be 280. We're at 281 right now, or it could be in that 268-ish level, and the third one being 247. So those of you that want to take a long trade inside of Nordic American tankers, maybe you just set up 3 little tranches out there, and you ladder into it, so to speak. But right now you're testing a key level of support. That's the bottom of that daily profile. I wouldn't bail on it, but do recognize where the other lines of defense are for you. And so I hope that helps you out. And as always, thanks so much for taking the time to write in. Dan inside the Tigers Den would like to take a look at Carvana. CVNA is the ticker symbol out here. Who was most interested in the shorter term time frame, was asking about the 60-minute-ish. So I'm going to pull over the 65-minute time frame. What Stevie likes to use when we take a look at intraday charts are equally timed bars. In other words, there's a 390-minute day in the trading session, the cash market. 60 minutes doesn't divide into it equally. But you know it does? 65. And that's why Steve uses a 65-minute bar. And yes, Dan, a TD9 count top is going to go ahead and confirm when this bar here closes at 1140. So we've got, another 15 minutes or so out here, but the pattern won't complete until the bar following bar number 9. So add 65 minutes to 1140. That gets you to about 1245 out there. That's when the pattern will complete on a 60-minute time frame. Note that high, because if price closes above that, tells you about a strong upward momentum move to the upside. Otherwise, expect or anticipate a pullback to support. What I don't have out here are profile levels. Why is that? I don't know, but we're going to change that post-haste here, because I would like to be able to tell you where support is at. So if you give me just a moment here, We'll find the TAS market profiles and get that on our 30-minute screen. Let's make sure. Yep, we're good. All is good. Let's go see where those profile levels are at for the 30-minute chart. Well, they're way down below 196. So the level of support on a retracement here, Dan, on a 65-minute time frame for Carvana would be in the 211.50-ish type area out there. Now, as long as we pulled up the charts, I wanted to make sure that I answered your question. We answered that right away. And I'd like this thing to shrink down. That would be good. Come on, work with me. Okay, you're not going to work with me? Why not? Oh, good Lord. Okay, here we go. At least I got rid of the file. Let me put it back where it belongs out here. Okay, now let's look at the daily time frame for Carvana. So the daily time frame from Carvana, what a nice move this thing has had. It has a profile change in trend. There was a buy the D point pattern as well. You're well above daily profile. This suggesting it wants to rally further. The weekly time frame chart, which had been below the bottom of its daily profile, is trying to get back inside it. A close above 228.06 tomorrow would accomplish that task. That would suggest to run to 238.51. or to 244.17. 244.17 in Carvana on a weekly basis is where a counter trend move would come to an end out there. So that would be a key level to watch. And on the monthly time frame chart, I see that bearish engulfing candle. Was there an A to B equals CD pattern to the upside? Stevie says the answer is no out there. That doesn't mean as in top, but price is pulling back and testing support, which is the top of that monthly profile. That form below price, that's a bullish signal, 175.17. So there's your 65-minute, your daily, your weekly, and your monthly time frame overview of Carvana. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're looking at ticker symbol RGTI. This is for Duncan inside the Tiger's Den. Dunk, the monthly chart, not really a ton of data out there. It's got a nice Rhodes Momentum Indicator bottom. Price trading above TD9 count breakdown resistance out there. Not really much else for me to report on for you on the weekly time frame chart. Prices pulled back for whatever reason. Well, the reason was the daily TD9 count top that was controlling things. And price found support on the weekly time frame. That's at that oscillator and change line. 888 out there is the number at this moment in time. So now to the daily. Daily forms a TD9 count Rhodes Momentum Indicator top. Pulls back, it closed below profile support, continued moving lower out there. I don't have a reason why it bottomed. The only reason why that I can see visually out here would come from that testing that oscillator and change line, even though price got below that this week, but that still is acted as support. Okay, if we take a look at the daily time frame, what we know is prices rallied. It's been closed above the top of its profile yesterday. The top of the profile is 1059. We're at 1051 today. A close above the top of that profile again today, Dunk, is going to generate a profile change in trend. That would then suggest a rally up to 1360-ish. That is the daily oscillator and change line. If price can close above that oscillator and change line, then that tells you that it wants to not only get back into the gap, which may have been your question, but also get back to its highs out there. So 1359-ish is going to be that key number. The first key number, though, is going to be the top of that daily profile, and that's at the 1059 area. As always, thanks so much for your request. Let's move on to our next one. That is to take a look at ARQQ for Nicholas. Nicholas is looking for some long-term growth and is wondering, what about this? I don't know what is contained inside of Kathy Wood's ARQQ, so really tough for me to answer that question, but I can share with you what ARQQ is doing as we speak right now. And that's the following. It is taking on its oscillator and change line. It's trading above profile resistance. So that's number one, 2754. And it's taking on oscillator and change line resistance. That's at 3080. A close above 3080, Nicholas, is going to suggest a run up to 4545. That would be its TD9 count breakdown level. On a weekly time frame chart, its TD9 count top has completed its work to the downside, or appears that it has, because it pulled back, tested, and rejected that green oscillator and change line. That suggests a run for resistance now, which is up at 4821. So watch that 3084 level-ish on the daily, because that says getting to 4545, and of course the weekly says getting to 4821. And on a monthly time frame, no profiles that I see to speak of. It could be suggesting it wants to get back to 194, and therein lies your longer-term question. Is that what it's really telling us from a long-term standpoint? You're going to get in something right now. I know this is for the grandkids and take it for a couple years time out there. I don't know if ARQQ is that vehicle or not, but I did share with you what I see on the charts and what the battles are up ahead. So I hope that helps you out. If I do think of something or come up with something, if it's a grandchild, I mean, like with my grandkids, you know, they've just been, they're long gold and they're long the NASDAQ 100. Period, at this stage of the game. And it's been that way for years for them. And when we get to that stage where we get into a real bear market, we're not there. We're not there. I know that goes against the grain of many others out there. I don't mind that. I'm just reading the charts the way that I'm reading the charts out there and what they're narrating for us, and I'll change that opinion when they give us a different set of evidence and information out there. The next request was to take a look at Apple. A couple of different people wrote in about this. Apple was written in by Brent and Nicholas. Brent's looking for a short-term long trade. Nicholas is wondering if this is the time to get in. Note, I am long Apple, or subscribers are long Apple. We're not liking what we see right now. So I would have told you earlier if I'd started the show with Apple, that, yeah, it looked like it was an opportunity to get in because price was trading above the bottom of that new daily profile. So there was so we got into this trade because of a TD9 count pattern. Typically, the TD9 count pattern will make its move up to its oscillator and change line, and we didn't have any profile when we got into that trade. Yesterday, there was a new profile that finally formed, and price rallied right up in that resistance level, 238.53. We're now trading below the support level of that profile, 231.48. And we're trading back into this TD9 count pattern out here. That TD9 count had volume of 49 million shares. We have traded today with 20 million shares. So price is moving into that swing point with volume. And a close below that level being 229.72, is going to generate likely an A to B equals CD pattern to the downside. I'm assuming, and I shouldn't do that because you know what that can do. But I'm assuming this is about a 0.382 retracement. If it is, then that could set up that A to B equals CD pattern to the downside. Now, perhaps by day's end, the 231.48 level holds. If so, you're then consolidating between support and resistance out there. Now, that's on the daily time frame chart. Let's go see what the weekly time frame chart is doing. And on a weekly basis, we are trading now below profile support at 236.94 out there. Yesterday, it looked like we were getting back inside. That was its message. Now it says we're going to close below that this week. Not a good sign. And on a monthly basis, we don't have to worry about it necessarily right now. It's got a TD9 count, potential Rhodes momentum indicator top, but price right now is trading below its oscillator and change line. That is printing at 231.93 out there. So you're moving with volume. Now let's take a look at some intraday charts. See if Stevie sees anything out here on an intraday chart. And the answer is the only thing that I've got for you, I hesitate to pull this over because it took me so long to close that last one, is the 30-minute time frame chart. And a 30-minute time frame chart, price is trading at a level of support, 230.40. So this is kind of the last level here where price would, the last level, I mean, there could be other levels. The last level that I'm looking at 230.40, where Apple, in fact, could find support and bounce from here. Not that there's a bottom signal, but pulling back to support can, in fact, be a bottom. That's the last thing that I see with regard to Apple. So I hope that helps you out, Brent. I hope that helps you out, Nicholas. And I'm looking for this to hold support and rally for subscribers and myself out there. Let's move on to our next request, which was to take a look at Walgreens Boots, I believe it is. WBA is the ticker symbol, and this is for Alton, and Alton's question is buy, sell, or hold. Well, Alton, today is going to become bar number 8 of a TD9 count. So it's not a buy because I wouldn't ask you to buy where you're coming into a potential topping signal. Now, it may be just 2 more days before it actually does form that. It will complete the pattern more likely than not in 2 more days. And that could also be the top out there or the high. So is this a hold? It's definitely a hold out there. I would hold on to it at least at this moment in time. Is it a sell? It could become a sell between today and Wednesday, and that sell could take you back to 11.17. Now, would I short a $12.72 stock? Not on anyone's life, not even on the person that I hate the most in life, which I'd struggle to tell you who that even is. I don't have hate in my life for the most part, so I wouldn't wish that on your worst enemy. How about that? As I don't have a worst enemy that I really know about there. But you can't short a $12 instrument. This one was traded at $85 back in 2020 out there. It can be bought out. Who knows what might be going on there. So I hope that answered your question with regard to Alton, with regard to Walgreens Boots. Strong on the weekly for sure out there. So it's more of a hold. It's not a buy. And I don't really see it as a sell. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Alton has the same question about Dollar Tree. Is it a buy? Is it a sell? Is it a hold out here? So the price has pulled back today. It did it 2 days ago as well into the buy zone of its bullish structured profile. As a TD9 count bottom that was also tested, that was from the trading day of December 19th. It was a swing point as well that had 3 million shares. That was tested this morning. We've done 1 million shares in about 2 hours of trading. So it is a similar volume test and rejection of that swing point, but you're inside this bullish structured profile. Here's what I can share with you that it's likely to do. Alton, it's tested and rejected support. If it can't bust them to the downside, it should try to bust them to the upside. Well, right now the upside is $72.84 on the daily time frame. If price can take that out, which is a green oscillator and change line, it would increase the odds of a move to 76.74. So there's your upside. To the downside, you would close out the trade if price closed below that TD9 count bottom, and that was at 68.17, because that would suggest lower price. At least that's the daily time frame. The weekly time frame shows that price closed above, has been traded above the top of its weekly profile for 4 months in a row, 4 weeks in a row, that is. That equals 1 month. And today we're trading just below that level. 70.55 is that area. If we close below 70.55 tomorrow, it just says caution. And finally, on the monthly time frame, let's go ahead and populate this, see what we have out here that we're working with. What's the deal here? Calculated, thank you. It's got a beautiful TD9 count bottom pattern. It says over time price ought to make its way up towards 90.35 out there. So your question was buy, sell, or hold. Would I sell this when price is at support levels and it's rejected a prior swing point, even with its higher volume? I would not. Not when you've got a monthly TD9 count bottom, a weekly Rhodes momentum indicator bottom, and a daily just testing support here. Is it a buy? You can certainly, you've got the daily signal out here and the monthly and the weekly, really. So it does look like a pretty decent buy, at least at this stage of the game. And that is Dollar Tree, DLTR. Alton, thanks so much for your request, as always, and have a terrific Thursday. Hector and Patty wrote in. They'd like to take a look at the SPY. The very specific question. And Hector and Patty, I wish I had my black background screen up on here. Because I've got the A to B equals CD tool, and we would be exact to the T. But basically the question is this, if I read it correctly, and that is, didn't the SPY form a buy the D point pattern out there? And as I take a look at, visually drawing the A to B point out here, we're using that same time frame, I believe. Got to use the highest high, so that should have been December 6th. You used December 1st, you say, or I wrote down December 1st. Now, you have to use the highest high out there for sure. So maybe it was December 6th and I just typed in the wrong, and I typed in the wrong thing on my screen. But if it was December 1st, it's got to be December 6th is the A point. The B point out here is going to be the low from December 20th. And then that C point is going to be December the 26th out there. So that's your A to B equals CD pattern inside of the SPY out there. It didn't make it, or at least it doesn't appear that it would have made it all the way to that 1-to-1 price projection. But let's say that it did. It's still not a buy the D point pattern. The reason is it does not have a bullish reversal candle. Then just because it's a green bar, that was not a bullish reversal candle. It did have a bullish reversal candle yesterday. So if you're asking me, was yesterday the potential of a buy the D point pattern, I would say yes. That's assuming we're close enough from this A to B equals CD that's been drawn in there. The problem is we were so close to resistance, which was the top of its profile at 594.83. For example, I wouldn't have, and I probably didn't say that inside the newsletter, knowing that that gap up when we were so close to resistance, was somewhat futile. But 594.83, folks, that's the number you'd be looking for inside the SPY to close above to suggest that we move to higher ground out there. So I hope that answers your question with regard to the SPY as well. What you like out here is that the SPY from a monthly standpoint, at least at this stage, is holding its green oscillator and change line. And even though it has a monthly Rhodes Momentum Indicator top that took place in December out there, price then has pulled back and tested and rejected that key line out there. And that is at 576 and change out there right now, printed out at 74. Would you ever go short your long-term funds with price remaining above the green oscillator and change line out there? And I have to go with no. I'm not trying to be, say that and you got to, pay attention to the range out there. What's the weekly chart showing us? What's the, but at this stage here, that is just such a key, pivotal level to be watching to keep you long when it comes to your longer term funds, your 401k area out there. So I hope that helps you out. Let's go to our next question. That is from ELO. Would like to take a look at Newmont Mining. So in the case of Newmont Mining, just like with the GDX, that we took a look at, you're going to complete a TD9 count top today. And that suggests that price should pull back to support. And support here on the daily time frame, the first level of support would be 39.17. That would say you'd be giving up 3 days worth of gains. Of course, I don't know that it's going to go right back to that in 1 day or anything like that, but you do have that potential for a top. When you look at the weekly time frame chart, weekly has a nice TD9 count bottom. And what you'd really love to see this do come this form last week, come tomorrow, is close above the center of that profile. The center of that profile, see, we're below that profile for only 1 month. This would be month number 2. Normally, I would say that's where a counter trend move would come to an end. I really can't make that statement because we've only been below the bottom of that profile for 1 week. No interest in being disingenuous here. So your resistance levels on the weekly time frame for Newmont, 42.52 and 43.10. And on a monthly chart out here, you're just consolidating with inside the profile. So we went through and we took a look at the XAU, and the XAU was showing that maybe the TD9 counts are not going to form. There is a directional correlation, significant directional correlation between the GDX and gold, most certainly between Newmont Mining and gold, Newmont Mining being the largest holding out there. But if you're a conservative trader, then I would say go ahead and take your profits out there, because more likely than not, we're going to see some type of retracement. So ELO, I hope that helps you out with regard to Newmont Mining. We had a request from Yvonne to take a look at Tesla. So we pulled up the charts for Tesla. What do we know about it? We know that we are trading within, I take that back, we are trading above profile resistance. That's at 410.41. That way it looks like it was tested this morning or close to it. So we're trading above resistance, 410.41. That was one of the things you were looking for. And we're trading, that's support. So we're trading above support, 410.41. We're trading below resistance, which is the green oscillator and change line, 427.80. Kind of a narrow range, but that's narrow range on a daily basis for support and resistance. The weekly time frame chart, it's got a couple of different levels of support. The one that's most interesting to you right now should be 392.32, the weekly oscillator and change line. Resistance here, 452.68. Would be that level. To the downside, there is a bullish structured profile buy zone between 327 and 345. And finally, on the monthly time frame chart, let's go ahead and populate these candles out here, see what kind of signals we can get. Did I do that? No, I didn't do that. That was the wrong button. Let's hit the proper button out there. It's calculating. You're trading about profile resistance, the oscillator and change line. Monthly chart for Tesla looks muy bueno out there. So, Yvonne, I hope that helps you out. Thanks for that request. You also wanted to take a look at Disney. So what we'll do here, we're going to a break here in just about 4 or 5 seconds. I'll get those charts situated for you for Disney and see if we've got any other requests that have come in. So, folks, stay tuned, and we'll be back in just a few moments.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So Disney formed a Rhodes Momentum Indicator top. This on the trading session back on December the 2nd, and it's been in a downward mode ever since. You can see a nice downward price channel out here. It did form a TD9 count bottom pattern, did on December 17th. You did have a rally that found resistance where counter trend rallies would end. In its case on that was at the 115 level. It's negated its TD9 count pattern. There is an A to B equals CD pattern to the downside. We don't have to really type that in. It's achieved the 1-to-1 level. What it needs is a bullish reversal candle to confirm a bottom out there. Support area it's testing right now is a daily support, the bottom of its profile, 107.42. Resistance at the 109.53. 109.53. On a weekly time frame, the daily is the one that's really controlling price action, but in this case here, we closed below last week. The green oscillator and change line still below it. It's lost momentum. Its next level of support, I'm not saying price will get there, but its next level of support, that's a question you asked, is at 99.59. And on the monthly time frame, its level of support will be at 101.24. As far as resistance, well, your real key resistance out there, I think I gave you profile resistance on the daily, 109.53, but it's going to end up being that green oscillator or whatever the color is. It's going to be the oscillator and change line. That's going to be the key level that Disney would need to close above in order to tell you that it's ready to start running higher out there. Let's look at the next request, last request for the day that came in. Is from Dan inside the Tiger's Den, BBAI. So we take a look at BBAI. It is trying to get back inside a profile, and where it's finding resistance right now, Dan, is that oscillator and change line. The bottom of that profile, which is trying to close inside, is at 382. So you'd like to see it close above that. Preferably, quite frankly, you'd like to see it close above that green oscillator and change line. If it can do that, and it being 390, then it would give us more data to suggest a move to 421 or 460. Likewise, if it closes back below those two levels out there, maybe it was just a counter trend move. Weekly chart looks pretty good because it's held its green oscillator change line. Folks, that's it for Stevie. Have a terrific Thursday. Thanks so much for joining us. I'll look forward to seeing you tomorrow on Fantastic Friday. And be safe out there. Take care.